Good afternoon everybody, so it's February the 16th, welcome to the channel. If you are new, today we're going to be covering standard deviations, broadening formations and a failed cup and handle all in one video, so make sure you stay to the end to catch it all. If you are new, please consider hitting the like and subscribe button. It does the channel a world of good and it helps other traders like yourself view this content. So without further ado, let's get into the good stuff. So we started today with our good old new day opening gap, right? So if we look up here, this is the new day opening gap, and what did we do? We rejected it, right? And this is it here. So this is the rejection of the new day opening gap. We then had this rejection candle, price moved up, hit consequential encroachment, failed off, right? So if you follow me on Twitter or you're in my Discord, and by the way, if you're not already in our Discord, I highly suggest you join. It's currently free to enter. But I posted all of these trades in here that we took today, and we made some good money. Another guy in our Discord, Mr. Perez, he took another trade from the rejection of. And he took the rejection of this, so this was the rejection of the other day, new opening gap, NDOG, and he took that for a lovely trade all the way down, took sort of 10 handles or so. So let's go back to the price action. So obviously the price moved up and it failed, and it got back below, and this pink line here is consequential encroachment of the weekly gap, of the weekly wick, right? So this is the trade I took. It was early in the morning, so I took a little two-handle scalp on two contracts, 200 quid, thank you very much, or dollars. And then price consolidated. So this is where it gets interesting for me, because this is something I always look out for. And this is a broadening formation. And a broadening formation is when you get a tight period of consolidation. And then for me, when I look at it, is when you get these three down candles after the consolidation. And you get this broadening formation either side. And I'll show you another example of it in a minute, so bear with me, because we had exactly the same thing happen yesterday. But what I look for is balanced price range within these three down candles in the broadening formation, right? And then when price runs away, I'm looking for it to retest, to move higher, break to move lower. Okay, so now you can see this broadening formation. Let me just very, very quickly take you over to yesterday's price action. So during the lunch hour of yesterday, what did we get? So broadening formation, we had the three down candles, and in this instance the balanced price range was these fair value gaps, which have been traded back through. Fair value gap, what did price do on this occasion? It came down to the BPR and flew off. So the clue today that price was going to be heavy was we broke that BPR, right? So price moved up, came back down and broke through it. So where it broke here, this was my first indication we are potentially heading south. And so price chops around, comes back for one more test. Up here we had a volume imbalance, right? And if you guys go into your 15-minute chart, this always gets a little bit messy when you do this. Yeah, am I going to be able to spot it? Probably not. I'm not going to look for it. But there was one on the 15-minute, right? So I don't want to spend time digging around the different charts trying to find volume imbalances. But there was another volume imbalance exactly the same on your 15-minute chart. If you go to the 15:45 candle little beat, you'll see a volume imbalance in there. And so we had confluence on fractals. In that we had a volume imbalance. So I was looking for trade price to run up into this volume imbalance for me to take a trade, and I missed it by a tick, and it ran all the way down here. Such is life, right? That is what happens sometimes. Price targets on the way down. So we're looking for expansion of price, we're looking for the standard deviations to expand. So this is 2 standard deviations, on this swing it's 4 standard deviations, and then on this swing it's 6 standard deviations, right? So we're expanding lower. Then this is a nice next interesting piece of price action. So this was at the 8:30, and this is when the news embargo was lifted. And what we know is if we have a range, and if price is heavy, it won't get back into a premium to run lower, right? So we had this fair value gap that was left behind, and this was the trade that we took, or could have taken, and so price got into equilibrium of the discount range of the displacement leg, right? And it failed, right? It rejected it. So once you saw this price fall back below, and then this candle here failed to even get into consequential encroachment of this wick, guess what? That was your entry to get in. Don't think, just execute and then evaluate after, right? So price ran all the way back down, and at this point we were back at the new weekly opening gap, right? So for those of you who know my trading style and are in my Discord, I have actually coined this 3 drives pattern using ICT concepts. It's mine. ICT has loads of concepts, but he has not coined this one. This one is mine, right? And we are looking for a 3 drives as a reversal pattern, and price will come back into either a fair value gap or an order block. In this instance, it's the order block before moving higher. So what did we get? So look at my other videos as well on broadening on 3 drives patterns, because I do a lot of recovery, a lot of analysis on them. So price came down into this fair value gap, moved higher. We had the buy side, which purged and then came back down, and at this point it was taking the sell side, and we saw it sweep. As soon as we saw that and price moved away, we're thinking bullish, right? And what were we targeting? We were targeting initially this buy side here, and we were targeting this standard deviation, which is the first one above this buy side, right? So ultimately, the draw for this price leg was to run up into this fair value gap, which was left in the after 8:30, right? It was running back up to that price. So I didn't trade into that. I was happy taking my trade off of this, and then I wanted to see what would happen in the PM session, right? So this is where it gets really interesting. This is another piece of price action which I have adopted with ICT concepts, and I'll talk you through it now. So during the AM session, we had these relative equal lows that were left. Price during the lunch hour didn't sweep them, so it was always a back of mind target, right? I'd initially had a target of 454.75, and that was using a standard deviation leg up, right? But price failed. So what I did is, this is a BPR here, and I didn't think price was going to break below because it already come down, and this was the coming into the 130 algo, right? So at the 130 algo, I was looking at this BPR, and I took my trade off consequential encroachment of this BPR, and I ran it into I was running into this to take out this buy side, right? And if you guys want to check, please drop onto my Twitter. I post all my trades on there so you can see them. It saves me having to dig around in my charts when I'm doing these reviews. But they're all on my Twitter and they're all in my Discord if you guys want to join. So the price ran up and I was watching Man United play Barcelona, so I got a little bit bored of waiting for it to run. So I put my stop below these relative equal lows and it came and took them out. So I took about 8 handles on this run, right? And then this is what I mentioned in the Discord. So what is this? What is this painting here? This is painting a cup and handle, right? So retail. So you got the cup and then you have the handle, and everyone in retail will be going, oh, it's going to break through this double top, right? But I've been doing a lot of back testing, a lot of back testing, and what I've found is that you get this on the top, right? You get this on the top. And let me just bring in my study material just so you can see it, because it will make it a lot clearer for you. So if I just bring this in, so this is what I have. So this is all my backtesting material, right? So you have the green candle here, the rejection candle, and then the next candle, it doesn't go into, it doesn't take over this green candle. It stays within inside, and then this candle can't even get over consequential encroachment of the red candle, right? Then it falls away, comes back, red candle, green candle, and then you get this, the handle, right? And in the handle, you're looking for a fair value gap to form, or BPR. Price will come back and test it. Sometimes it'll come back and test it twice. There's your entry, right? So this for me is the first indication. So that is my study that I've done for this this particular setup. And so let me just show you what you have here. You have exactly the same, right? You have the green, you have the red, which fails to break the rejection candle, and another red candle that fails to get above equilibrium of this wick. Alarm bells are now ringing, right? So I've got that in the back of my head. I obviously took this trade, price came back up, and then once it broke here, what did we get? We had the green and the red, right? I know it sounds crazy, but you know, stuff repeats, right? And so price came back down. And then I mentioned this in the Discord. I said if it comes back and fails 43, we are going to target 24, right? And so, hold on a second. So we're going to target 24, right? And we're going to target 24. These relative equal lows. So then I'm getting really dialed in, and price action, and I showed you before, once you get the second fail, we're looking for a fair value gap to form, or BPR. In this instance, and we're looking for price to come and test it twice. So you had the BPR, the two candles are exactly the same distance, run that across your chart, and then we had a fair value gap left behind after the second test, right? So I was looking for price to run back into this fair value gap to parlay in a second entry, but I got impatient and I took my first entry here, and I set my target down at 24. So let me just, this is easy to find because this is the last trade I took of the day, so I can show you that it's easy to find. So you can see I got in at 41.38. I had a brain fart here, and I had no stop ATM strategy, so I was like, no, I'm not running that risk. So I bailed on that contract and then ran that one, right? So, but this is the bit which is hell, right? Check this. So go on my Twitter and you'll see where I have my PT set, right? So my PT was set on the break of this, so I put it on 20. I had it literally on 24.25, and that's what it pinged, right? That's where I got triggered. Look where I got filled. 30. Ouch. Ouch. So yeah, my broker robbed me today. But if we break down this price action here, what do we get? We get a rejection candle, and then all of these anemic candles failing to get back into consequential encroachment of this wick. What is that showing? Immense weakness, right? And then even this push, this candle here, couldn't even get into consequential encroachment. So all of these are alarm bells, right? You would expect, if this was going to move higher, you would expect some curling action, right? Some spooling action before a rip through, if it was going to be a true cup and handle, you know, breakthrough with a double top. So this is all, you know, indication to me that price is moving higher. So as soon as you saw this candle fail to get in here, this could have been your entry, and then obviously you're riding it down. We've also got a frame that we had a breaker block, right? So this candle here is a breaker block from earlier, from the AM session, right? So you drag that across your chart, How many times has that breaker block been tested in the PM session? It got tested once here, broke back through, tested again. So what's likely to happen if it breaks through? It's going to absolutely crash, right? It's not going to stay around and come and say hi to the breaker block again on the other side. It's off to the races. And so the price actually came and crashed all the way back down to taking out the lows of the morning session. So that is going to wrap up my daily recap. I hope you found that useful. And as always, guys, if you like this video, please consider smashing a like and subscribe. It'd be greatly appreciated. And until next time, trade safe and take care. And all my links are in the socials in case you want to join our Discord. But until next time, trade safe. Bye.